How goes it all? Welcome back to Patterson on Properties. Hope you guys having a great and exceptional day. All right, so first getting into the real estate investing game can be very difficult at times, just like any other new adventure or industry that one can get into. And if you're interested in becoming a real estate investor, here's a couple of things to remember. So when it comes to understanding financial terms, it can seem a little intimidating at times, family. So let's break down the basics of navigating through this world. With the number one, if your house is listed for $150,000 and one wants to know if it will generate enough rental income to cover expenses and possibly turn into a profit, the 1% rule provides a quick way to access this in a beautiful way. The monthly rent is at least 1%, the 1% of the purchase price, in this case $1,500. You found the property that meets the 1% rule. So at the end of the day, family, if the mortgage is $1,500 and one rents the property for $1,600 a month, then that means the one is making $100 a month, which translates to they're making 1% of profit. For example, another example, if somebody was paying, the mortgage is $1,500 a month, but they're charging and the rent $2,000 a month, then it would be called the 5% rule because they're making $500 a month, and therefore they're making 5% in profits. Number two, appreciation. Now, of course, appreciation depends on the city and state that you choose to invest in or live in. And if you do not know what appreciation is, if one buys a property for $200,000 today and the area becomes more desirable over the time, the value of your home may rise. 5 years later, you might be able to sell it for $250,000, making a profit simply by holding on to the property. Number three, equity, which translates to ownership stake in a home. If I buy a home for $250K and take out $200K mortgage, that means I will own $500K worth of the property. Time is definitely money, and paying down a home loan over time increases the value of the equity of my home. In short, current market value $250,000, remaining mortgage balance $150,000, equity $100,000. Number four, cash flow, which is the main reason why I started to purchase the rental properties. So in my situation, I bought property at the prices between $30,000 and $60,000 out of the good old days, life before the pandemic. The monthly mortgage payments on the properties are between $330 to $400 a month. I charge renters up to $1,200 a month, depending on the property. But in this example I'll use, I charge renters $1,200 a month, so my profit is at $700 a month. Not a bad deal for a townhome, 3-bedroom, 1-bathroom townhome. Number five, net operating income, known as NOI, which means the money property generates after covering operating expenses but before mortgage payments. If you collect $2,000 in rent each month and spend $800 on maintenance, taxes, and other costs, your net operating income, known as NOI, is $1,200. Number six, capitalization rate, known as the cap rate. I remember learning about this in those real estate seminars back in 2018. Helps compare different rental properties by showing the return you'd get if you bought a property with cash. A 10% cap rate usually means a better return than a 5% cap rate, but also likely comes with more risk. Last but not least, number seven, cash on cash return, meaning if you put $50,000 into the investment and it makes you $7,500 per year, your cash on cash return is 15%. This helps you measure how efficiently your cash is working for you. Total cash invested, down payment plus closing costs, $4,500, annual pre-tax cash flow, $6,600, cash on cash return, 14.67%. A lot of information, went through it pretty quickly, but at the end of the day, no matter how much information one gets in anything in this life, especially when it comes to the real estate investment game, you're going to learn something new. Some things cannot be taught, some things cannot be read in a book. Sometimes life is going to happen. Deal with crazy tenants, deal with bad property management companies, dealing with the city or the county that you're dealing with natural disasters, just dealing with the structures of a property having a specific issue. These things cannot be taught. One has to go through it in order for them to find the best way to proceed forward, in order for them to become the best landlord that they can be. Don't be a slumlord. If you're paying your rent and taking care of your property the best of the best of their ability, then make sure that you're not a crappy landlord. And I'll leave it at that. All right. Don't forget to check out Patterson Rental Properties. We wholesale real estate in the DMV area. Patterson Rental Properties, buy rental properties with that company. And we just I like to network with people all at the same time, so don't forget to check me out. If you're a stock market investor, crypto investor, individual, retirement account investor, don't forget to check out WEBULL Crypto.com, Coinbase, all those platforms. I mean, obviously right now, this is the buy the dip season when it comes to the crypto and when it comes to stocks. So if you want to, do your research and buy at the dip, like I'm going to do. But I'm not giving out financial advice. You got to do your research and go from there. All right. So on that note, do the great thiefy things, like, share, and subscribe. Have a good day. Make money moves. Or you can live your life forward, as they say in Spanish. Bienvenido a la vida. Welcome to the life.